Coming up on MSI Wealth Chronicles.
They're getting creative now with hard inquiries. And so you have to be careful.
It says click here to get a soft pull.
Within a short time frame, okay? It will only count as one inquiry.
Don't just let anybody run your credit report. And when you do, ask them if they can do that.
You have to be very, very, very careful with your inquiries. Now, they could do a soft pull mortgage credit report.
Really?
So, yes.
Keep your eye open. Make sure you know what you're signing when you let somebody mess with your credit, because 10% is not a lot to your score, but that could make a lot over the life of a loan for a home.
Yeah. More than money, it's about empowerment. Welcome to MSI Wealth Chronicles. My name is Ricardo Mendiola, and this is Mr. Jesse Hartman.
Yep.
And today we're going to be talking about hard and soft inquiries, what they are, how they affect us, how long they stay on our credit report. So let's dive right in. So do you want to tell everybody what a hard inquiry is?
One of the best answers I've seen anybody say about hard inquiries is a hard inquiry is any inquiry that you initiate that is going to be making some form of credit decision where you'll get a financial benefit.
Good job. Because this is so for new hires here at MSI, this is my subject that I cover with the new hires.
Right.
And that's exactly what I tell them. It's an inquiry that you typically did initiate, and it was for the purpose of credit, right?
Right.
So, right smack on how I explain it. And could you give us some examples of some hard inquiries?
You go and buy a car. If you're going to go buy a car, they run your credit. Yep. The one that surprised me is when you go to Target and they say, hey, apply for a card today, get 50% off your purchase.
Yes.
And what they're doing is they're doing a hard inquiry.
Yeah. So kind of like the definition says, any inquiry that is for the purpose of credit is going to be a hard inquiry. So, example, a mortgage, that's for the purpose of credit. That's an inquiry.
Right.
A vehicle, credit cards, personal loans, student loans, anything for the purpose of credit. But I will say this, and I cover this with all the rookies. They're getting creative now with hard inquiries. And so you have to be careful because even that definition is not true at all times. And let me give you an example.
I'm glad you are, because I have one to ask.
Yeah. So for example, in the mortgage industry, whenever you go pull your credit report with a lender, that's a hard inquiry, and that credit report for the bank typically costs about $100 for all three bureaus. So mortgage credit report about $100. Right. So that adds up, especially if you're like an online lending company where you're doing a bunch of advertising, let's say on Google. You're getting a bunch of online leads that are filling out the application. And so anyways, imagine this, every single lead that actually inquires, imagine if they all pull a credit report and that costs you, the business, $100. It adds up. So what a lot of lenders started doing to counterattack that is now they could do a soft pull mortgage credit report.
Really?
So, yes. So a lot of mortgage companies do that. And so what they'll do is, you fill out the application, they tell you it's a soft pull, it won't hurt your score. So based on the definition, it should hurt your score, right?
Right.
You're filling out a mortgage application for the purpose of credit, but it doesn't. If they specifically tell you we do soft inquiries, it won't. And so the bank that we're partnered up with, where we refer a lot of our clients to whenever they're credit ready, they do soft inquiries.
Right.
And here's their process. So they'll do a soft inquiry. If everything looks good, then they do the mortgage inquiry. But if things don't look good, now they tell you, hey, here's what you need to work on. You need to work on these collections. You need to pay down some of your credit cards. And so let's say that lead never comes back and never buys a home. Well, that soft inquiry credit report, it wasn't $100 like it was if they would have just done the hard inquiry from the very start.
Amazon's doing that. And that's what I was going to ask about, actually. You just answered a question I was curious about, because we, one of my friends asked me about it and pointed me to it, and looking at the Amazon Prime Visa, it says click here to get a soft pull. And it actually explains, says if you are able to be approved and you go on to get the card, then it will become a hard pull. Okay. And it actually said that in the small print.
So Amazon what? Amazon credit card?
Yeah, an Amazon Prime credit card.
Nice.
Yeah.
I didn't know that.
And so that's what I was actually going to ask you about. I was like, how did they pull that off?
Yeah. So a lot of people are doing that. And also, I mean, not just for cost, also because you hear this from a lot of consumers. Is it going to hurt my scores? Yes, it is. Oh, I don't want to do it, you know? So I think, to combat that, now a consumer that's afraid on applying for a mortgage because it's going to ding their credit, now they don't have that anymore. They don't have to worry about that anymore because a lot of mortgage companies are doing a soft pull.
When they do that, what do they look? Are they actually getting all the information and kind of what are they doing to figure that out?
It's a full. I've looked at it. It's a full credit report. I mean, it's a full credit report.
Wow.
But they can't use that one for the entire process. If they see that the client looks good, their scores look good, and all the other factors that they use to determine whether someone's going to be able to qualify for a mortgage, if they do look good, they look like they're going to qualify for the mortgage, then they do the hard pull to finish the transaction. But if it doesn't look good, it stops there. They don't spend the $100 to do the mortgage credit report.
So really, like you are requesting it, but technically you're requesting for them to peek at your credit to see if you should try to buy or not. So you're not actually doing a financial
because I don't know what the specifics are. I don't know why it's a soft inquiry, like what they did. But there's a lot of people doing a soft inquiry, and a mortgage company is one of them. Yep.
What are the normal soft inquiries? What else is considered a soft inquiry when people look at your credit? Well,
I mean, let's jump into that. So hard inquiries, we said it's typically an inquiry that you did initiate that was for the purpose of credit. Okay. Right. And so, but before we go on to soft inquiries real quick, I do want to add the fact of how long do inquiries stay on your credit report? A lot of consumers have that question.
Right.
Would you like to share that with everybody?
Sure. A hard inquiry, an inquiry will stay on your credit for 2 years?
2 years, yes.
And it has the strongest effect on your credit, in the first year, the first 6 months, something like that?
Yeah. I mean, you're correct. It's like it's the same thing as like a collection, right? Whenever a collection goes on your credit report, it affects you. But then the older it becomes, the less it affects you. So inquiry is the same thing.
Right.
Inquiry goes on your credit report. It has the most damage to your credit score at that, whenever you first initiated the inquiry. And then just like you said, then every day that goes by, it starts affecting you less. And then after 2 years, it falls off and it doesn't affect you at all. Yep.
Right. That's what I thought. Yeah.
Yep. But soft inquiries. So soft inquiries is an inquiry that you typically didn't initiate, is what they say. And it wasn't for the purpose of credit. I like simplifying it whenever I'm going over it with the new hires. I just say it's an inquiry that was not for the purpose of credit. And some examples of some are employment. I give them an example of when they start here. When they start here, we look at their credit report. And so I asked them, for you starting here, whenever you started here, when we pulled your credit report and you authorized us to pull your credit report, was it for the purpose of credit? No, it wasn't. It was for the purpose of employment.
Yeah.
And so that's a soft inquiry. Other examples is insurance.
Right.
A lot of I'm assuming a lot of consumers might not know this because a lot of new hires here don't know this. Whenever you apply for insurance of any kind, but specifically, mortgage insurance and auto insurance, whenever they look at your credit report, whenever you apply for insurance, they look at your credit report. Your credit score is a big determining factor on what your premium is going to be. And so they look at your credit report. And so, but was that inquiry for the purpose of credit? No. It was for the purpose of home insurance. It was for the purpose of auto insurance. So guess what? It's a soft inquiry and will not affect your credit score.
So as somebody gets their credit in a better place, they really should go back and look at those kind of things and try to
100%. 100%. Yeah. So in other words, our clients, for example, or anybody, somebody improves their scores and let's say that they got car insurance or got auto insurance or home insurance while their score was low. Yes, you're absolutely correct.
Yeah.
When they get their scores back up, go shop it again. Go shop it again. You can probably find some savings. Yep.
Wow.
Yep.
That's crazy.
Yep. So so hard inquiries are the only ones, like I was saying, that soft inquiries don't affect your scores. Okay.
Right.
So the only ones that pertain to that 2-year rule that they get removed after 2 years is the hard inquiries.
Okay. Mm-hmm.
Now, let me ask you this. Here's a question that we get a lot whenever a consumer enrolls with our services, MSI services.
Right.
Should they dispute the inquiries? Like how much, could you tell everybody how much a inquiry affects their scores? We already determined earlier that a hard inquiry does affect your scores.
Absolutely.
Okay. A big question is how much?
My experience is the first one usually doesn't actually affect your score. Like if you only have one, but after that, a lot of it's about 5 points apiece, right?
Yeah.
Something like that per.
I never get into, me specifically, I never get into the amount whenever someone asks me that question.
But it's 10% of your credit.
Yeah, that's where I leave it at. I leave it very broad for anybody
Right.
that asks me is 10% of our score comes from inquiries.
Right.
The biggest factor of our score comes from payment history, how we pay our bills, 35%. You pay your bills on time, it helps your scores a lot. You pay your bills late or get collections, it hurts your scores a lot,
high.
right?
Yep.
30% of our score comes from debt. Right?
Yep.
Any debt on our credit report affects our scores. It could be good debt, like debt like a vehicle loan, a
Right.
student loan, your mortgage, even credit card, right? That's what I kind of call good debt. But then you have your bad debt, the debt that's attached to collections,
Right.
Any debt affects your credit scores. Then comes 50% of our score comes from the age of our credit, and then comes the inquiries. 10% comes from inquiries. So it's the least of all the areas of how scores are calculated. So it doesn't affect you too much. But you are correct on what you said. The more that you get, it does affect you more.
Yeah.
And
it's hard to quantify it by the number of, by the individual inquiry. So 10% is a really good number to look at.
Yep. And lenders, I mean, so do inquiries affect your scores? Yes, they do. Okay. Not much. And then they fall off after 2 years. But they still do affect your scores, okay?
Right.
And go ahead.
I was going to ask a question on that. If I'm looking to buy a house, you were talking about lenders there. Do I just go to one place, or
that's a great question.
What do I do to get the best rate?
Yep. So that's a really good question that I didn't even have, in our notes to talk about today. So I'm glad you mentioned that. So the government understands that you're going to, the three biggest things that any consumer is ever going to finance are what? I guarantee you, we could guess them here. Mortgage, autos, student loans.
Student loans, that's all I could think of.
Yep. And so because of that, they encourage us, they don't want us to be trapped. They don't want us to be afraid of shopping a mortgage because we're afraid of losing a couple points on our credit score.
Right.
They don't want us to be afraid of shopping the interest rate on our vehicle loan whenever we're trying to buy a car because we're afraid of that little inquiry. So what was created was what's called the buffer period. And any inquiry that is for the purpose of a mortgage, auto, or student loan within a short time frame, okay, it will only count as one inquiry.
Okay.
So to answer your question, yes, for a mortgage, shop it. Shop it as many places as you want to. But make sure that it's done. I always get confused by the exact rule. We'll have to, unless you know it, but we'll have to Google it. I always get confused if it's 14 days or 30 days. So just to be safe, 14 days. But unless you know the exact rule.
I actually know the exact
what
rule.
is it?
Vantage credit score, it is 14 days.
Okay.
So if you're looking at a Vantage score, which is your most common one that you get from like a consumer site, is 14.
Okay.
For a FICO score, it is 30.
Yeah. So that's why, see, I knew it was 30 and 14, but I always got confused what is what. So I always tell consumers 14 days because they can't go wrong. If you do all your shopping within those 14 days, auto,
that's just smart.
Student loan, and a mortgage, you'll be fine. It will only count as one. So back to answer your question, yes, you should 100% shop your interest rate that your lender is giving you whenever you're looking to buy a house to see if you could get it, cheaper elsewhere because it makes a huge difference. I mean, we're seeing it right now more than ever.
Oh yeah.
I mean, we just came from, just 2 years ago, we were at, mortgage interest rates were in the twos, in the ones. I know some people, I didn't get to take advantage of that, but I know some people that got a high ones, 1.8, 1.9 on their mortgage.
I got it at 3.
You got it at 3?
Yeah.
The lowest I got was 2.75. Yeah, but I know some people that got in the ones. Yeah, they might not ever have to refinance for the rest of their life. Yeah.
Or shouldn't.
Yeah. Some people that I know, they don't want to sell ever because of the interest rate that they have right now. It just doesn't make sense.
Yeah.
If I sell my house and then buy a new one, my new interest rate is going to be 6 right now. Yep. But yeah, great question about the buffer period. But what I was saying, what I was also saying about the inquiries is, aside of a inquiry affecting your credit score, even though it's minute,
Right.
okay, still a lender could be biased in his own way,
Sure.
and still deny you. Like, let me give you an example. Let's say you apply for, let's say, a credit card in multiple places.
Right.
Okay. Each inquiry is going to affect you. But let's say you had good credit anyways. Let's say you had a 700 credit score when you started. You applied at 5 credit card companies because you wanted, I don't know, a new credit card to do balance transfer. And so they all ding you, 5 of them. Let's say your scores drop to 670, okay? And then you go try to, I don't know, apply for something else, anything. It could be anything. 670 is good enough to get approved for a lot of things.
Most everything.
You should get approved. But lenders will also make a separate opinion. They don't just look at your credit score. They look at the whole entire picture. If you have a lot of recent inquiries, I've seen a lot of people get denied. I've gotten denied myself. Whenever I have a lot of inquiries that happen here within a short period of time,
right.
I've gotten denied because I had too many recent inquiries. And it makes sense. Wow. I started digging, why? Why does that matter? And they say that is one of the first things that someone in a financial bind, that's one of the first things that they start doing. They start seeking credit, loans, credit cards for balance transfers. So they take that as a sign. Even though you might be, honestly just trying to, whatever, get another credit card.
Right.
And you really wanted this credit card, and that was the whole purpose of you applying for that credit card and this one and this one. It was because that's the 3 that you wanted because they offer phenomenal points and your friend told you about points and you never knew about rewards points. And, that might have been the reason for you applying for those 3 credit cards. But they'll totally form their own opinion and they look at it as, hey, that's the first sign. They're desperate. They're desperate for credit. And even though your score might be a 670, the fact that you have a lot of inquiries here recently, they still might deny you. Yeah, so you have to be very, very, very careful with your inquiries. And that would be, one of the advices that I would give to consumers is just be smart with your inquiries. If you don't need it, don't get it. Like the one that you were talking about earlier. You go to Target and they give you a discount 20%, whatever it might be.
Yeah.
If you don't need it, if you don't need that discount, you don't need the credit card. Don't apply for it. And especially here's a catch. Especially if you're going to need to make a big purchase here in the near future, don't you dare get that credit card for that 20% or 50% or 10% discount.
That'd be
a
good thing for the people out there to know. What is a good time period before a major purchase that they should stop doing any inquiries?
Yeah. I mean, to be, the longer the better. I mean,
the longer the better.
Yeah. So if you could wait, no one's going to do that. If a lender looks at your credit report and you have no inquiries in the past 2 years, beautiful. You don't have any inquiries, so they can't form their own biased opinion about you.
Right.
And then you don't have any inquiries that are going to affect your credit score. So your credit will be at an all-time high as it pertains to inquiries. But of course, if you can't do 2 years, 1 year and 11 months is good. 1 year and 10 months, 1 year. The ones that affect you the most is recent.
Right.
I would not dare going into making a big purchase and having a bunch of recent inquiries from a month ago or 2 months ago, even 3 months ago. Because like we said earlier, the more recent the inquiry is, the more it's affecting you. Yep.
Yes, I mean that's kind of a big thing for people to think about because there's a lot of those places. I mean, everybody wants to give you a credit card of some sort, and it sounds really like 3 to 6 months before you definitely don't want to whatsoever.
Yep.
And just keep your eye open. Make sure you know what you're signing when you let somebody mess with your credit because 10% is not a lot to your score. But that could make a lot over the life of a loan for a home.
Yeah, for sure. 100%. Yep. And so another question that we get a lot is from our clients at Inquire is, can you help us dispute the inquiries? And so the way that I would answer that is we personally don't dispute inquiries. Kind of like we were saying earlier, it's 10% of your score. It's not, a lot of people that inquire about our services, they have bigger fish to fry.
Right.
They have collections. They have and like we said earlier, a collection is 35% of your score. And then the collection usually has debt attached to it. That's 30% of your score. So a collection has it could affect you up to 65% when an inquiry is 10%.
Yeah.
So that's why we tell our clients, look, you have bigger fish to fry. We have bigger battles, to pick and choose. So we don't dispute inquiries. For that reason is that it doesn't hurt you a lot. And then the second reason, in case you don't know you personally, right? The reason why we don't dispute inquiries is you could get in trouble, not in trouble, but it could cause some, heartache and headache for you. And let me give you an example. This happened to us before. Let's say you just dispute all your inquiries. And let's say there's an inquiry on there from 6 months ago. And
Right.
it was for a brand new credit card that you opened up 6 months ago with Capital One.
Right.
If you dispute that Capital One inquiry, okay, imagine this. You applied for a Capital One credit card 6
Right.
months ago. They give it to you. It's in your pocket. You've
You're
been
ready
using
to
it.
use it and
Yep, you're already
been
using it.
part of your life.
You've been using it, yep. And then now all of a sudden Capital One gets a letter. You're disputing that inquiry. They're like, oh, we gave them that credit card. Who's using the credit card? Guess what they do? They close it. Because they think someone fraudulently opened it up because you're disputing the inquiry. You're saying, I don't recall this inquiry. Can you please show me proof? They'll close it. And we had that happen to some of our clients where because of that dispute, their credit card got closed. And then we never heard the end of it from the consumers, right? So we're like, you know what? Let's not even go there. So we don't even dispute inquiries. They don't hurt you a lot. And then also you got to be very careful. Do not dispute inquiries is the advice that I would give you. Do not dispute inquiries on accounts that you actually have right now.
Sure.
If you have a car with Toyota Motor Credit, don't dispute that inquiry. You have a credit card with Bank of America, don't dispute that inquiry. Okay?
Boy, that could make a mess for you, couldn't it?
Yeah. All the stuff that you got denied for, okay, dispute those if you want. Can you get them deleted? Yes, you could get them deleted. But yeah, that's why we don't dispute inquiries.
That's just rough.
Yep. But any tips for? I know we already gave a couple of tips. Any tips? I mean, you might even have some personal tips that you have on how to manage inquiries.
As far as personal tips goes, what I found out recently, what you talked about earlier about, it's not a hard pull. They do the soft pull before the hard pull. Ask for that.
Yeah.
Don't just let anybody run your credit report. And when you do, ask them if they can do that, because at the end of the day, if somebody were to tell you, hey, you're going to apply for that credit report, it's going to hurt your credit and you're not going to get it.
Yeah.
You wouldn't do it.
Yeah.
So I would look for that kind of thing. And if you plan on buying something, the other piece I can say is if you plan on buying a big purchase, home, car, anything like that, then plan ahead, especially in an environment with everything going on in the world right now. Plan ahead. Don't get any inquiries for a while. See what you can get dropped off. Matter of fact, pull your credit. Find out when the ones you have are going to drop off.
Yep, for sure. But yeah, I mean that kind of summarizes everything.
I think we got it
inquiries.
all. Thank you for watching MSI Wealth Chronicles, building legacies one episode at a time. We really appreciate you tuning in, and of course, leave comments because we'd love to hear from you. Thank you very much.